have you ever seen this happen? A company comes out with good news and its stock just completely tanks. Well, that is exactly the bizarre story we're going to get into today with the women's apparel retailer J.Jill. So let's dive in.
So on March 31st, J.Jill's stock didn't just dip, it absolutely plummeted. A staggering 25% drop in a single day. You'd think they must have just announced some kind of total catastrophe. But here's where things get really weird.
Because on paper, their quarter was actually good. The company beat Wall Street's expectations for both earnings and revenue. I mean, they made more money and brought in more sales than all the experts predicted. So what gives?
What on earth could possibly cause a 25% stock crash right after a positive report? Well, the answer isn't about what happened yesterday. It's all about what the company said is going to happen tomorrow. You see, in the stock market, the past is pretty much ancient history. Investors are always trying to bet on the future. And when J.Jill's management gave their official forecast, what they call guidance, for the year ahead, they sent a massive shockwave through the market. And right here, this is it. These are the bombshells that sank the stock. A projected sales drop of up to 7% in the first quarter, an even steeper drop in something we call comparable sales, and a big hit to their full-year profitability. We're talking about a key cash flow metric dropping from over $84 million down to $75 million max. This is the data that scared everyone.
Okay, and let's quickly define that term comparable sales, because it is so critical in retail. You'll often hear it called comps. It basically tells you how the core, established part of the business is doing, by ignoring all the noise from new stores they might have opened. So yeah, a projected drop of 7 to 9% here, that is a major red flag. It signals that the existing stores are really starting to struggle.
So the big question is, why such a downbeat forecast? Well, management pointed to two really powerful forces hitting the company at the exact same time. It's like they're being squeezed from both ends of the business.
And this chart just says it all. The first problem, costs, specifically tariffs. In 2025, they cost the company $7.5 million. Okay, but in 2026, that cost is expected to double to a whopping $15 million. That's a massive financial headwind to have to sail against.
Now the second problem, it's coming from their own shoppers, and you can hear it in the CEO's own words right here. Customers are becoming bargain hunters. They're waiting for sales, they're looking for promotions, and they're not buying items at full price anymore. And as you can imagine, that absolutely crushes a company's profit margins.
But J.Jill isn't just, throwing up a white flag here. To deal with this perfect storm, management laid out a pretty comprehensive three-part strategy to fight back.
The plan is actually very clear and structured. First, they've got to update what they're selling. Second, they have to completely change how they attract and interact with their customers. And third, they need to modernize the underlying technology that powers the whole operation.
All right, let's break down that first pillar. They're trying to modernize their style, streamline their clothing line to get rid of stuff that isn't selling, and test out new products like accessories, bags and belts, to try and get a bigger share of their customers' wallet. They're even experimenting with tailoring the inventory in specific stores to match local tastes.
Now the second pillar is all about marketing. See, J.Jill has historically focused almost entirely on its existing loyal customers. Now they're shifting that focus to what's called the top of the funnel. The big goal here is to build way broader brand awareness and bring in totally new shoppers who may have never even thought about J.Jill before.
And just so we're all on the same page, top of the funnel refers to the very first stage of marketing. The best way to think about it is like a real funnel. At the top, the wide part, you're casting a really big net just to make a huge audience aware that your brand even exists, hoping you can draw some of them in for a closer look later on. And finally, pillar number 3 is the big tech upgrade. They've got a new system for managing orders that's already up and running. They're also rolling out a new platform for planning out what merchandise to buy. And, this is the really cool part, they're starting to use predictive AI to get way smarter about forecasting their inventory.
I think this quote from the CEO is fantastic. It shows they're not just chasing buzzwords like AI for the sake of it. They have this really practical 3-question test for any new piece of tech. Will it make us more money? Will it save us time? Or will it get our products to customers faster? It's just a really disciplined, results-first approach. So when you connect all these dots, the bad guidance and the 3-part plan, you start to see the story that J.Jill is trying to sell to Wall Street. They're trying to frame 2026 not as a disaster, but as a necessary year of transition and investment.
The CEO calls it a period of deliberate, accelerated change.
They know they have to make some big, bold moves to fix the business and attract new people. And they're basically framing this really tough year as the required first step to do that.
So the most important point is this. J.Jill is making a strategic trade-off. They're basically accepting short-term pain, the lower sales and profits we saw in their guidance, in exchange for what they really hope will be long-term gain. They are asking their investors for patience.
And this leaves us with the ultimate multi-million-dollar question: is J.Jill's plan a brilliant strategy that's going to lead to a huge comeback? Or are these challenges, the tariffs, the bargain-hunting customer, is this just the harsh new reality for the entire retail industry? Well, on March 31st, the stock market placed a very loud, very clear bet. Now we just have to wait and see if J.Jill can prove it wrong.